Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome to FPA daily video update on the Forex markets. Today, guys, we will take a look at the New Zealand dollar again because mostly we have talked a lot on Great British Pound in the weekly research. So right now it doesn't need any adjustment. Just continue move down as we have suggested. So on the euro currency, we do not have really some significant changes. So it's also not necessary to make any updates by far. So that's why it makes sense, I hope, to make an update and an adjustment to our trading plan on the New Zealand dollar. Because here it's a very interesting situation right now. You know, guys, that will be the Reserve Bank of the New Zealand meeting on the Thursday, and currently the investors expect almost 100% probability that the National Bank of the New Zealand will cut the rate on 25 points, so this will be 1.75%, and so 100% probability. So it's really a very tricky situation when the market sure that rate will be cut. By two reasons. First of all, because if rate indeed will be cut, this event already has been priced in the current level, and that could lead to the opposite action. But if National Bank will not cut the rate, that will lead to the strong upward action even more, because this will be the positive surprise for the New Zealand dollar. And it will force all traders who have taken the short position and who trade this possible rate cutting will close the position. So this really could be opposite action, very strong opposite action. So that's what about the possible the New Zealand Central Bank decision on the Thursday. But from the technical point of view, we have very interesting picture, since I hope you remember that we mostly trade right now tactical setup on the weekly chart on the New Zealand dollar. On the weekly, we have the bullish grabber right here. I will show you. You probably remember that because we have discussed it not really too far ago, so not too much time ago. So you can see here is our bullish grabber. This pattern suggests taking out of this top, and mostly we have talked last week on the New Zealand dollar, and we discussed mostly the retracement right back down inside of the body of this grabber. That could let us to take the long position with this pattern. And right now, situation becomes really very interesting and coming to its culmination. Because on Thursday this will be the central bank decision, and right now market is preparing as to the decision, as the possible consequences that will happen. Another tricky moment, as I said, is the 100% probability that is priced in of the rate cut. That's really could be really a significant joke market could play with the traders. So that's why what we will be watching for on the New Zealand dollar. First of all, on the daily chart, as you can see, that market stands very close to the MACD predictor line. And here, we could get minor bullish grabber. That will suggest the taking out of this top. But, guys, taking it all together, it will mean that consequently, if market will continue move high and taking off this top, it will mean that it definitely will continue even further and will taking out this top as well. Because upward action by some minor grabber will mean that retracement is over, the market stands on the road to the upside. So here we have very clear action, so upward thrust expansion of the market, contraction based on this engulfing pattern. Bearish engulfing already has been completed, so minor target of this pattern has been reached. That's why retracement really could finish somewhere in this area. We will talk about it a bit later on the intraday charts. So on the daily chart, let's watch for possible bullish grabber that could be formed. It's not necessary that it will be formed today, but it's also possible. But also it could be formed, for example, tomorrow. So market will show this also. Trading session will be very close to the MACD predictor, and it really could be formed tomorrow as well. So we will be watching for these patterns. On the intraday charts, on the 4-hour time frame chart, what we have? Recall our discussion right at the eve of the non-farm payrolls release. So we said that probably could be some skewed head and shoulders pattern, and probably we will get some kind of the A, B, C top, D pattern. We have come to this conclusion especially when we have seen that probably non-farm payrolls release will bring the positive surprise, and this really has happened. And we said that probably market should complete some kind of the ABCD pattern down. So that has happened. You can see here is 100% extension target. The market has hit it right at the non-farm payrolls drop. Right now it stands below monthly and weekly pivots and shows the bounce up after drop has happened. Here, guys, very important moment we have. It is based on the weekly pivot support 1. We know the pivots framework that usually when the market stands on a retracement on some bull trend, pivot support 1 should hold this retracement down. In this case, this will be the confirmation. If market will stop and will hold above the pivot support 1, this will just confirm that we are dealing with the retracement. This is not some new bear trend. This is not the breaking of the bullish trend. This is just retracement inside of the bull trend. And currently, as you can see, market has touched the weekly pivot support 1 and bounced up. So here we could treat it as retracement, at least currently. What if market will not hold there and drop further to the next target? Because by the hand shoulders pattern, although it's not really has the perfect shape, but still market could reach as far as 1618 target. Well, this will be a bit more sophisticated situation because from the one point of view, the weekly grabber that we have here will be valid, but the chances that it start to work will diminish because market will break on the way down all supports, all pivots, and they will hit some really deep target inside of this bullish grabber pattern. That's why if this really will happen, the market drop further right to this area. Well, in this case, we will have to watch for some other patterns, maybe some more confirmation from the market of this bullishness. Personally, I do not want to see that. It's really very deep drop. And I just think that probably we will not get this drop by having the 100% probability of the rate hike, guys. It's so to see this drop, we need to get some not significant probability of the rate cut. And if rate will be cut, in this case, market could drop. But as we have already totally this event priced in, I would not see any reasons why the New Zealand dollar should drop even more on rate cut, because everybody knows that this will happen. So that's why it's not really big chance that the market will drop right to this area. Just putting it all together, it's analyzing of the fundamental background of the current processes. So that's why, guys, it's really significant chances that we could see the upward action reestablishing right from somewhere from this area. But as I said, it's better to wait for the clear patterns. First of all, on the daily chart, it's better to wait one session or maybe two till the end of the Wednesday. If we will get the grabber here, we could use it for a possible taking the position. Also, maybe some other patterns will be formed here on the 4-hour time frame chart, on the hourly chart. Because on hourly chart, guys, we have here some kind of the maybe it's also some kind of the hand shoulder. So you can see drop left shoulder head. This could be right shoulder right of the 618 support. Very nice bounce by the bullish engulfing pattern here. But what's more interesting for me, guys, in the current situation on the hourly chart, just take a look at contraction picture. What do you see here? This is, guys, bullish flag is forming. Upward action, flag retracement. So you can see this downward slope channel. And what is that? Spike down. That is called by the Jack Schwager as the bearish trap. So this is the failure breakout of the flag pattern. While market on the non-farm payrolls release dropped lower, pierced this lower body border of this flag, and returned right back up. So this could be treated as the failure breakout, and usually when the market forms the bearish trap later it breaks flag in opposite direction. That's, for me, it's very important moment. That's why, guys, I'm really look with the doubts on the results of the National Bank of the Reserve Bank of the New Zealand of the rate cut. New Zealand dollar should drop. Well, I'm really very suspicious on this in this moment. So I suppose that it really could lead to the opposite action, mostly because that all investors sure that this will happen. So that's my current view on the New Zealand dollar. That being said, on the intraday charts, we're watching for some patterns, and we're watching for a bullish grabber on the daily. If we will get them, in this case, probably we could think about taking the long position based on the weekly grabber that we have. And let's see what will happen on Thursday on the rate decision.